Welcome to online class, dear children. Today let's have discussion on next important accounting ratio, which is a part and partial of ratio analysis. The name of ratio is solvency ratio. So solvency ratio, the name itself is saying that solvency ratios are those ratios which is having the capacity of paying the obligations of the company. So capacity of paying the obligations in the sense, as you have seen in the previous class as a part of liquidity ratio, there you have seen majorly according to your syllabus current ratio and quick ratio, and quick ratio also can be called acid test ratio, nothing but which will be converted easily fastly into the cash. So there you have seen, there you people calculated based on short term and short term current assets and current liability whether company is able to meet its obligations or not. So same way when it comes to second thing which is a part of solvency ratio, here you will see the things which is combinedly which is consist of whether company is able to meet its long term assets and long term liability or not, to know that position, to know that obligation, to meet its obligations, we are supposed to calculate solvency ratio. So solvency ratios are those ratios where company is able to meet its obligation, especially which is related to long term assets and liability. So when it comes to solvency ratios, again it is broadly classified, again it is consist of four major important formulas, four major types of solvency ratios you can see. Among them, the first and most important ratio in the solvency ratios are debt equity ratio. So debt equity ratio, name itself is saying, so as the solvency is nothing but capacity, solvent, whether person is able to pay or not. Same way here also debt equity ratio, it is showing, it is telling you that whether company is able to reach, whether company is able to meet debt to equity or not. So debt is nothing but the amount which will be contributed by the company. The company, what they will do, they will give the debt instrument to the people through which they will subscribe the capital. It is like loan, it is like amount which they have taken company to run the company, to see the smooth functions. So same way equity is what? Equity, it is the amount which is also we can call it as owner's fund, which is contributed by the owner. It is a part of share capital also, I can say. It's a part of share capital. So here asset is there it is a liability. So here we are going to check, we are going to calculate, we are going to ascertain whether debt over equity possible is there or not, whether company is able to meet its obligations or not. Will come to know with the help of this formula. What actually the debt equity ratio formula is? Long term debt divided by equity. As in the definition itself I told you, as in definition itself I explained you. Here we are completely focusing, we are completely calculating, we are ascertaining long term debts, not short term debt. The debt which company has taken by keeping in their mind for the long run purpose. So the formula of debt equity ratio, it is consist of long term debt divided by equity. Here we are going to check equity over long term debt. How much equity we have, how much share capital we have, as equity is a part of share capital. How much equity we have and how much long term debt we have. Whether long term debt is more than equity or equity is more than long term debt, here we are expressing in the form of ratio. That's it. So in this lesson, everything we are, as the lesson name itself is telling you that accounting ratio, the accounts, the numerical, the data, whatever we get it, we are expressing in the form of, in the way of ratio. Here it is one mathematical expression we have used with the help of different formula, different data which is based on the given information, and we are calculating and will come to know whether company is able to meet or not. So that capacity, that solvency, that ability we are going to calculate, that ability we are going to know. So same way the second formula of solvency ratio is that total assets ratio. So total asset ratio, already you people know very well what actually the asset is. So assets are those which is owned by the owner, which is owned by the proprietor by keeping in their mind for long run, for longer period. So in this formula, in this case, in this segregation, we are going to check total assets on long term debt. How much long term debt we have, loan we have, and how much assets we are having. How much long term assets we are having, especially we are going to calculate in this way. So each and every value, each and every formula, dear children, if you take each and every formula and segregation is telling you that whether company's ability and whether company is not able to reach its obligations, only we will going to calculate in this case. And the third thing, proprietary ratio. Proprietary ratio, before you could go to the ratio of proprietary ratio, proprietary in the sense nothing but the owner of the company, the owner's capital which is contributed by the owner's ratio, we are going to calculate in that case. So of course here we will take owner's fund. Equity is nothing but owner's fund which is contributed by the owner of the company divided by total assets. So what we are doing, we have taken here the amount which is contributed, the amount which is invested, the amount which is commenced by the owner with the total asset of the company. If you do, you will get it proprietary ratio. And the next thing and the last formula in a solvency ratio which we actually calculate is, it is interest coverage ratio. What actually interest coverage ratio is telling you that the amount which we invested in the company, how much we are going to get it in the form of returns at the end of the year, coverage in the sense which we are going to get it on our investment, interest coverage ratio. And the formula is telling you that net profit before interest and tax on interest on long term loan only we have taken. These two aspects amount we will check, how much actually interest which is earned by long term assets we will take actually, net profit before interest and tax which we are supposed to calculate by identifying based on the given information, and we will take interest on long term loan, not short term loan. The solvency ratio, it is completely stood on, it is completely based on long term purpose. So whatever the aspect we are discussing in this ratio, it is completely stood on, it is completely based on, it is completely ascertained on long term assets as well as long term liabilities. So these things you keep it in your mind. And the ratio lessons, the first basic things which you people need to remember in your mind is, first you should know 4 major categories of the ratio. What are the 4 major category of ratio? Number 1, liquidity, solvency, activity and profitability. So liquidity, solvency, profitability and activity ratio, these all ratios, again it is having segregation. As in previous class we discussed about liquidity ratio, it is broadly classified into, for your syllabus, 2, current ratio and quick ratio. So in today's solvency ratio class, it is again broadly classified into 4. That way you need to concentrate in examination, they will give the combined calculation of the ratio, right. So one formula, one question they will give and they will ask you to calculate these all information. So in this concept, in this lesson, based on, keep it in mind, again I am reminding you, you will get confused from this lesson, accounting ratio lesson, you will get 6 marks definitely, right. So that 6 mark question, if you want to solve, if you want to secure that mark, first you should have minimum knowledge how the questions are going to come. Based on that you should learn. So how the questions will come, it consists of one particular problem they will give, and based on given information, what formula they are asking us to apply, what is given information, these all things you need to keep it in your mind before you could solve, right. So based on given information, they will ask you to calculate all these 4 ratios together in one question only. So calculation will change, calculation differs one problem to another problem, right. So in accountancy, the people will get confused when, in the sense when actually they feel their confidence will go down, in the sense when the questions are not similar to one to another, and it won't be similar to one question to another question. So concept based learning should happen. Practice more than 4 to 5 problems on one concept only. If this given information is given, how to calculate. If the information is given differently, how to calculate. So based on given information only in accountancy, we do the calculation, we do the ascertainment, and we record at the end. So these all things you keep it in your mind, then accounting ratio lesson will be very easy. 6 marks definitely you people will get it, not easy, definitely will get tricky question. So be ready to solve this kind of question if it comes in the examination. Refer, follow the previous year question paper, previous year materials. Those things will help you lot to solve, to attempt the questions. So children, I hope I am clear with the today concept of solvency ratio. I will just rewind once again, I will just repeat the things once again. Solvency ratio is one of important major segregation of accounting ratio. Solvency ratio can be defined, it is the ratio which is telling you, which is defining whether company is able to meet its long term obligations or not, based on 4 formulas, based on 4 ratios again. Number 1, debt equity ratio, total asset ratio, proprietary ratio, and interest coverage ratio. So these all formula and accounting ratio formula you people should learn. How you will learn, it's left to you people. But accounting ratio formula you people write, just make a list in one paper. The way the technical the techniques which you do is it's left to you people, but it's mandatory to learn formulas pakka manner. So I hope I am clear with today class, dear children. Solvency ratio, if any query, just feel free to ask and just get clarity regarding the concept. Thank you.